Hey everyone, welcome back to your weekly review of the financial market, especially the Forex market. A couple of things to note. We do have a couple of announcements coming up from the central banks. ECB was last week, a little bit dovish. And then we have the Bank of England. Also, didn't meet market expectation. They didn't raise interest rate by that 25 basis points. The voting was pretty slim. It was 5 against 4. So it was just one number off. So it's kind of like 50-50 in terms of them not hiking interest rates this month. Inflation has been falling in the UK. The economic number hasn't been that great either. The unemployment rate was on the rise. So I think it was kind of a given that they have to make that decision that, against fighting the inflation and the condition of the economy over there. I think the worsening economy takes priority. So we have the Bank of England not hiking interest rate this week, so kind of disappoints the market. But overall, I'll show you later on in terms of what the sterling does in the market. And then we have the FOMC, a little bit more on the hawkish side. They didn't hike in September, but in terms of their economic projections, the interest rate target for 2023 remains with a 25 basis points hike. So we are looking at a November live for that interest rate hikes to happen. And in terms of the projections for the interest rate in 2024, it is right around the current level. We are looking at a potential drop to about 5% in 2024, but I think the FOMC stance is they are likely going to keep the interest rates higher for longer to fight off the inflation. So we're not expecting a lot of rate cuts going on in 2024. Maybe we're expecting maybe 2, 3 at best, but we're looking at about 2 interest rate cuts in 2024. And then we have the Bank of Japan today. Again, going back to their dovish comments that they're not going to be looking at adjusting their monetary policy. They're going to keep it ultra loose to bring back the economic growth as well as to keep the inflation a little bit higher in Japan. But yeah, comments coming up from the Bank of Japan has been a little bit confusing. We don't know what to take off this one here. But I think the comments in terms of the quiet exit that was mentioned by Ueda about 2-3 weeks ago, in a sense, it's a little bit more to help out with the yen weakness. It's kind of like a verbal intervention per se. But yeah, looking at the markets, I think the Bank of Japan statement is pretty clear that they're going to keep ultra easy monetary policy for longer. But how can we trust what Bank of Japan is saying right now? I think the market doesn't believe that, and it's pretty much reflected on in terms of how the dollar yen has been moving today following the release. It was slightly weaker again. The Japanese yen is slightly weaker, but not by much. It wasn't like a surprise shock that it's a dovish statement. We didn't see that huge of a rally in the dollar Japanese yen. All right, so let's just jump into the technicals. I want to show you the dollar index first. Here's the dollar index. We're still within range here, maintaining a position above that 105 level. I think we're still on track towards that 106. A little bit of a resistance building up at about 105.50 at this point in time. So this is more of an immediate resistance for the dollar index. I think this is going to get followed up next week in terms of whether we are looking at a potential rejection today from that 105.50 level. But so far, we're still above that 105 level, so the US dollar remains strong. I think overall from the FOMC's hawkish tone compared to the ECB, the Bank of England, the Bank of Japan, sure, it's a skip from the FOMC, but the overall tone is still hawkish. That's still really supporting the US dollar. So we have a little bit of a risk-off sentiment in the market following that hawkish tone coming out from the FOMC, but we have a much clearer picture in terms of what 2023 is going to look like. I don't think there's any more surprises coming out from the FOMC in 2023. So overall, I think the market is pretty balanced. Everything is pretty well price in at this point in time. So I think we can focus a lot more on the technical side of things. So here's the Aussie USD. And we mentioned this range between 63.50 and 65 cents on the Aussie USD. The Aussie USD is well within this range. We don't see anything weird. We don't see any breakout. The range is still valid. I think we are still going to be using this range going forward into next week as well. So overall, it's a pretty stable development in the currency market, especially the major currencies, considering how intense the past 2 weeks is coming out from the fundamental side of things. So Aussie USD relatively stable. The range is still intact. The next thing is the Euro USD. The range is also intact, surprisingly. We did have the Euro USD dip down a little bit lower below 1.0650, but not a close below 1.0650. So 1.0650 is currently still acting as a support, and it's currently building up as a much stronger support. Now, just to remind you, that 10650 level was the June low for the Euro USD. We're currently looking at this as a strong support developing. I think we are potentially looking for a potential bounce off the current level at 1.0650, potential return towards 1.07. Obviously, 1.07 needs to be retested. We definitely want to see a daily close above 1.07 before we can see a much clearer potential correction on the Euro USD. For now, it is still just hovering around support level. Not enough confirmation to say, yeah, you know what, this is a market that's correcting. Now, Pound USD, it's kind of the outliers here. This one here breaks below 1.23. In fact, we have a daily close below 1.23, and by going by the fundamentals, I think this is well priced in. We've got bad economic numbers coming out from the UK. Retail sales been down, GDP growth has been down, UK unemployment is on the rise, and then when the inflation is coming off, the Bank of England is a little bit more dovish. They, in terms of their voting, they were expected to hike rates by 25 basis points, but they didn't do that. And if we take a look at the voting status, it's 5 against 4. So it's very close to that 50-50. It's just one member, tipping the bucket here. But for now, the Pound USD, it's well below 1.23. We're not expecting a strong bounce coming out from the Pound USD, but it'll be interesting to see if the cable is actually able to continue its push lower. At this point in time, it's slowing down a little bit. I think the market is probably anticipating for a little bit of a confirmation in terms of a correction. So in the short term, I don't think we're going to slide lower than 1.22 in the near term for the Pound USD. We just confirm a close below 1.23, but because we confirm a close below 1.23, any pullback is probably going to be limited to about 1.24, 1.2425. So just keep that in mind for Pound USD. If you're thinking of going short on the sterling here, and you're thinking, oh yeah, you know what, I might want to go short sterling throughout the rest of 2023, I think it's not a bad idea, but we really want to see price pullbacks up a little bit towards 1.24 before we see any stronger selling pressure. But yeah, for sterling, this one here in terms of trend, it remains in a downtrend. It continues breaking key support levels. We've lost 1.2350, 1.23 range that we mentioned earlier in the outlook this week. So yeah, we're well below that level at this point in time. So really anticipate a little bit of a short bounce towards 1.24. In terms of range, is it worth trading? Probably not, because we need a little bit of confirmation before we can actually trade the correction, and then that correction is probably going to be limited to about 1.24, 1.25 range. I'll give you the updated range on Monday once we go through the outlook. We have a weekly close on the Pound USD, but I think that's kind of what we're anticipating for sterling at this point in time. Now, just to give you guys a brief rundown what's going on with the other sterling crosses. Sterling yen, this one here is has broken below 182, but we kind of have a little bit of a support building up at 181 for sterling yen, and that's still holding for now, and that's probably going to be related to the weakness in the Japanese yen. But that's pretty much it. I mean, this is the only one that shows signs of life coming out from the sterling at this point in time. If we take a look at the euro pound, you can see that the euro pound is just smashing the sterling. Sterling is just really weak at this point in time. The euro pound is gaining. Pound AUD, we're looking at the pound being pressured as well. Pound Canadian severely to the downside. Pound Swiss, it's pretty flat, but not going anywhere either. pound New Zealand also to the downside. So yeah, you can clearly see what's going on with the sterling. It's really weak, and I think it's fundamentally correct with how the market reacts to the information that has been released from the UK. So I think this is pretty normal. We're still expecting a bearish sterling. Probably the one that has a little bit of support is sterling yen, but then again, it depends on what the dollar yen does, and which is the topic of discussion. Now, the dollar yen, we're looking at that 148 level as a major resistance for the dollar Japanese yen. And going by how hawkish the FOMC is, and the Bank of Japan remaining dovish, price is not really too far away from 148. It kind of get capped out at 148.50, but overall, it's just orbiting around 148. So goes above it, goes below it, and then goes above it again for 148. So we're not really looking at that strong push. We're not looking at that strong momentum. If we take a look at the stochastics on the daily time frame, I think this is a little bit overextended to the upside. It's looking a little bit exhausted. Sure, stochastics above 80 could indicate that the trend would continue higher, but we are so close to the upper range of the resistance, which is 149 to 150, and price is just hovering around 148. So if you're thinking of trading the dollar Japanese yen, I think this is actually not a bad scenario, because the range that we saw this week in terms of where price is going, it didn't actually dip down below 147.25. So we do have an established range for this one here. In fact, if you're thinking of, yeah, you know what, I might want to go for 149, maybe 150, for a swing trade, just to give you a little bit of an illustration, not a signal or anything like that, okay? But assuming that if we're going long at the current price level, which is probably not a good idea, because I think price would pull back down to about 148 again. Now, adjusting this toward the potential target at 150, that's still going to give you about 1.5 risk reward ratio. So I think it's not that bad. Now, if there's another swing that develops in the market, probably higher than 148, for example, if we see the market pulls down a little bit towards 148 and then bounces off, I think that bounce from 148 would probably give you a much better risk reward ratio. Where that bounce happened, we can immediately adjust our positioning. Maybe our stop losses wouldn't have to be all the way down to about 147.25. It might just be at 147.50, 147.75. But yeah, given the current situation on the dollar Japanese yen, I would say don't just jump onto the bandwagon, especially on Friday where the market is losing liquidity and volume, right? I would probably wait until Monday Asian session starts, maybe closer towards the U.S. Open, before thinking of how we look at the dollar Japanese yen in the short term. But yeah, going by the daily time frame, I think we are stable currently at around 148. Not really a clean breakout. We're not really looking at a significant push higher either on the dollar Japanese yen. And the confusion is all around the Bank of Japan and the Ministry of Finance. So I think there's a lot of verbal intervention. I think there are attempts to discourage the market from shorting the Japanese yen. I think that's basically what's in play right now. And look, I think a lot of traders are really getting exhausted with how the Bank of Japan and the Ministry of Finance is, telegraphing their intent at this point in time, right? So they would say one thing, and then the next week they will do another thing. And, with today's monetary statement, they go back to being dovish again. So it's really hard to take on what the Bank of Japan is saying at face value. So just keep that in mind if you are thinking of, the Bank of Japan is dovish and stuff like that. I don't think the market is convinced as of yet. There's going to be a lot of verbal intervention going on from the Ministry of Finance in Japan, as well as the Bank of Japan as well. So anything yen crosses, take that with a lot of caution, right? I would navigate that on an intraday basis. I wouldn't, go on and hold a much longer swing positions on the yen crosses, just because we don't know what's going to happen. And in terms of the established range, we are kind of at the upper end and of the resistance, right? So just go with the intraday range that develops every single day. I think pivot points would be your best friend for trading the or navigating the dollar Japanese yen or the euro yen or the sterling yen. Look at this one here. We've got the weekly pivot, and the weekly pivot has been solid. Price didn't go down below the weekly pivot, so we are actually just hovering above the weekly pivot, but we're not touching that weekly resistance as well. So we don't have that drive. We don't have that confidence in the market that, I think the market is taking what the Bank of Japan says at face value. All right, so that's pretty much it. That's a wrap for this week. Good luck with your trades. Have a fantastic weekend. I'll see you next week.